Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin with the ASX 200, which keeps setting record highs. Violetta Todorova from Leverage Shares looks at the technicals.
We're expecting the RBA to deliver roughly 3 interest rate cuts for the rest of the year, which will support equity markets. So I'm slightly rising my longer term upside target to around 9,300 points. It's very conservative. I see a probability by the end of the year this target to be exceeded. However, again, in the shorter term, we might be a little bit for a pullback. I don't see a bearish divergence between the price and the RSI like I'm seeing in the S&P 500, but nonetheless, there is a very good probability of the index to decline to around 8,630 points and potentially to around 8,500 points, which again I'm seeing as a healthy correction, which would provide good buying opportunity for investors.
Well, now let's turn to Australia's big four banks. Violetta Todorova has analysed each stock chart. CBA just delivered another record result, but traders and investors will be focused on its extreme valuation. Violetta says the long cyclical uptrend is still there.
What we saw so far over the past month is just a retracement from the all-time high of $192, with the correction declining down to the 50% Fibonacci support ratio. So if we are to hold the support at around 165, that means this correction is healthy and CBA has a probability to resume its uptrend. However, the next week or 10 days would be quite critical because from a technical analysis perspective, if the 50% Fibonacci support gets broken on the downside and the correction extends to the 61.8%, which currently sits at around $159, this will indicate that the strong bull trend that we've seen, let's not forget CBA delivered more than 45% increase over the past 12 months, which is really strong gains for the bank. This will indicate that the uptrend is likely to weaken and we won't be able to expect the same magnitude of gains. I'm still very comfortable with the stock despite being still expensive. However, seeing a retracement to around 50%, it is already getting into accumulate territory. I don't see the stock entering bear market. So our ideal entry is between $159 and $165. So we are seeing a short-term rebound from the key support, and I'm actually very comfortable to start accumulating around here.
So there's the Commonwealth Bank and then the rest. So where are Westpac, ANZ and NAB positioned in relation to their February highs?
We've seen previous key resistance of $35.27 clearly broken on the upside, which is giving us an indication that the uptrend is likely to continue. And I'm assigning a longer term price target of around $38.50 for Westpac. However, if we look at the RSI, we are right at overbought territory. The stock just about managed to break its February high of $32.80, but I think it will follow the path of Westpac, and eventually that level of key resistance will be significantly broken, which will offer a longer term upside target of $34.50. But again, the RSI is getting into overbought territory. So I wouldn't be surprised if we see a little bit of weakness to around $31.50, which will provide great opportunity for investors. The NAB, relative to the February highs, it's the biggest underperformer from the big four. The stock is yet to revisit its February high, which is sitting at $41.68. I believe that will occur in the very, very short term, with the stock likely to try to break above that level, which subsequently I'm very positive it will.
That's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.